So in this section, I just want to go over dimensionalization of your chart of accounts and dimensions in general. Dimensions are kind of one of those more unique offerings or features, I would say, in Business Central. And it has a whole bunch of different use cases, but I wanted to really zero in on how it can work with reporting, specifically reporting off of your general ledger. But before talking about dimensions, we need to briefly chat about, for those who might not be, accountants or financial um, uh, financial team members. I wanted to talk about natural accounts in your chart of accounts. So the way it works generally in the world of accounting is your general ledger um, is broken up into sections that delineate the nature of the account or activity that you're posting to. And in a standard chart of account, you have different ranges. Typically, there's the 1000s for assets, the 2000s for liabilities, 3000s for equities, and so on and so forth. It goes on beyond, obviously, revenue. I just kind of need to put a little bit of a cross section here to illustrate the point. And these will generally be broken down into header accounts and footer or totaling accounts to basically organize the chart of accounts in more of a readable and organized fashion. Generally, this is how transactions are coded in any financial system to really designate where things should go to ultimately to be rolled up into reporting. So in this example here, for example, you might have a bank transaction where the posting account would fall under the current assets range. So that might be 1105, let's say, for your operating bank account. And that would be the account that's picked and transacted to at the point of entering your financial information. Again, to most accountants, this isn't a new concept at all, but for any non-accountants, this preamble is kind of necessary to go and discuss segmentation and dimensionalization of data. One example we'll do, just to kind of zoom in if you want to use that terminology on a specific subset of expenses here. We're going to go into and look at the general and admin accounts. So you have, for example, in this range of 60,400, you have all your G&A expenses, you'll have office supplies, meals and entertainment, and so on and so forth. So if you were to buy, a box of pencils, for example, you would code that to 6410. Your cell phone bill, you may code to 6440, and so on and so forth. So this is just really illustrating the posting accounts now. We're getting beyond just the header level and going into the natural account for posting accounts. But the chart of accounts, as everyone knows, goes a little bit further, because when you're purchasing, like in our example, pencils or office supplies, or you're coding revenue, or you're setting up your equity accounts or whatnot, it generally you're going to want more detail and be able to tag those transactions with attributes. So if we were to in this kind of example company look at the tags or the attributes or segments or dimensions, we may be looking at a four kind of faceted approach. Maybe you want to code the department at which this transaction is related to. So if you have a new forklift, you may want to code that to your warehouse department, or if you buy a new server, you may want to put it to IT, so on and so forth. But you might also want to segment or track, let's say, transactions against regions. So if you're expending marketing costs and you want to see where your focus regions you're spending the most on, maybe you want to tag it with a region code. Or maybe you have different channels for sales channels for selling your products or your services. Maybe you service wholesale customers and retail customers, and you want to track those in kind of their own fashion as well. Or maybe you have some regulatory reporting requirements. So maybe you have some standard industry codes. So there might be some regulatory body that has standard codes that you maybe want to track against to ultimately report on. Regardless of the need, generally most accounting software will have this approach, which is on the left, including Dynamics GP, which is a segmented approach. Your at the point of data entry, you'd be picking your natural account, and then you'd be picking your segments while transacting. So in GP, for example, that would be a concatenated string, let's call it, um, typically broken by either spaces or hyphens or whatnot, that use digits to delineate what the department might be, what the region might be, what the channel might be, and the industry, for example. Now, in most accounting software, there's some limit to that. In GP, I think it's 10 segments and or 66 characters, whichever comes first. But it really gives you a very low readability. If you were just looking at your transactions, you'd have to know that 001 correlates to admin. You'd have to know that 55 is the Alaska region, and so on and so forth. It also makes it a little more challenging to pull reports. You'd have to kind of splice it out and kind of pivot off of it and do a whole bunch of lookup stuff. And it doesn't really give you much flexibility in terms of reporting, or there's a whole bunch of engineering that's required to report off of it. In Business Central, however, the approach is a slightly different. Instead of going down this kind of row concatenated approach, you have more of a column and descriptive approach. So in Business Central, instead of being limited to just digits, let's call it, or numeric values, you can actually put descriptive codes. So when I'm looking at this line, even without having memorized the segments, I can see that the natural account is 6410, and it was coded to the department, admin department, the Alaska region. I know it's related to the retail channel, and so on and so forth. So it gives you a higher level of readability, and also by virtue of being separated into multiple fields or columns, let's say, it really makes the reporting side of things a little more easier, as we'll see when we go into the Power BI demo. However, it also has slightly other offshooting benefits as well. What this also means is that you can renumber any of these values in Business Central in isolation. So, let's say you outgrow your chart of accounts or you saturate them entirely and you need to add an extra digit at the end. You can do that just by going to the natural account of 6410 and just adding a 0 at the end, and it will rename the primary key of that field, and it will update everywhere else in the system where that's referenced. Same thing with each dimension. You might, for example, I know it sounds weird, but maybe you have your sales team and you had one department called sales, but now you're starting to expand your operations, and you're now starting to onboard an outside sales team as opposed to just an inside sales team as well. Well, you want to make sure that maybe all your historic transactions are your inside sales team are tagged to the inside sales. So you can just rename, if you want to call it that, the sales department to your inside sales, and just create a new one called outside sales. And that way you have full historic carryover of your data. But if you're like me and you're more of a visual person, this will all make more sense when we actually go into the system to take a look, as well as kind of the reporting side of things and kind of seeing the perks and flexibility around that. But before we do that, I'd like to jump into Microsoft Dynamics Business Central to kind of briefly chat a bit about data governance and how dimensionalization of your data also allows you to kind of keep your data integrity in check. When it comes to entering data or transacting in the system. So this is the chart of accounts page, and as you can see here, you have some fields here that tell you for this account what the balance is, current balance or the net change. And again, dimensionalization means that you don't need to have 100 or whatever number of accounts per each combination and permutation of your segmentation in here. If you really want to drill into the sales, or it probably makes more sense for people to do this on a P&L basis. Maybe maybe some of your expenses or costs according to dimensions. You can come in here and just filter your totals by that segment, if you want to call it that, or dimension. So if I go in here, I can just put in a department filter of, let's say, finance, finance and HR. When I click on that, you'll see that the numbers changed. Basically, it's now applied this filter to my entire chart of accounts, and these amounts updated as well to kind of delineate or kind of filter down to that department code. And I can add my next dimension and put in date filters as well. But ultimately, then you can drill down and see all the pre-filtered underlying transactions that make up that amount. Additionally, you might want to put some controls in place to govern how people are coding expenses. So I can pick an entire range here, for example, salaries, and I can go in and set up some rules or validation when it comes to dimensions. So here's the 3 different kinds of validation rules that I applied here just for illustrative purposes. You can see I've made the department code mandatory when someone's posting an expense to any of these GL accounts. So this is very important from a wage perspective. You want to know your overhead. So I've made it such that the department code has to be entered when you're coding transactions to the salaries expenses. So if someone tries to post an expense without a department code, it'll error out. It won't let them post. And then maybe I don't want to fragment, or I want to make sure that industry codes are not captured in this range for whatever reason. Maybe you want to kind of prevent a dimension from being coded in a transaction. In this case, I'm saying they should not be allowed, or no code, no industry code on any of these transactions. Or maybe we want to make sure that all the transactions that get posted to these accounts are only set to a specific code. Let's say our salaries and wages are centralized, so maybe we want the region code for these to all be, in this case, Hawaii. It's a little wishful thinking there, but I can govern. I can put in a validation rule to ensure that if anyone tries to pick any other region than Hawaii, it will error out and say, no, it must be Hawaii. And in this way, I can really kind of zero in on how people are transacting against these expenses. Now, this carries over into the subledgers. So if you're putting in a purchase invoice, this isn't just the general journal entries. For example, if someone's putting in a purchase invoice to, let's say a travel company, if you're a travel agency, if you're posting a travel expense, in the invoice itself, it won't let it post if these rules are in place. So it trickles all the way down to the, and all the way up, I should say, to the subledger as well. But in addition to that, you can also get a little bit more granular with how dimensions are to be used. So let's assume you have a sales channel for e-commerce, but for example, maybe you don't offer e-commerce services outside of the contiguous and continental United States. So I can say the intersection of the channel dimension and the region dimension is limited. And what does that mean? I can actually get in here and say, anything that gets coded to the e-commerce channel cannot be posted against Alaska, for example, because that's not part of the contiguous United States, or Hawaii for that matter, right? So I can actually go in here and put in this intersection to prevent people from being able to pick an e-commerce or code to an e-commerce transaction in Hawaii. And so in that case, I'm now governing, how the data is kind of shaped in terms of cross-dimensional reporting, right, between 2 dimensions. So that's all fine and great, but what does that mean in terms of actual reporting? So for that, I'm going to switch over to Power BI, and I'm using the desktop one. Once you actually finish and publish this, it's accessible in the web, so it can be accessed on tablets and phones and whatnot. But I really want to illustrate here some of the just overarching concepts in Power BI and how dimensions dovetail with that. So this is a very kind of busy page, so I'm just going to briefly describe that this section here on the left are my filters, and you can see these are the dimensions I set up. So the channel, department, region. I decided not to put an industry dimension in here. A, because it would be cluttered, but B, it maybe didn't make much sense if I'm doing, a more, for my own financial purposes, maybe it's kind of an irrelevant code for tracking profitability and whatnot. Then I have these kind of table views. A lot of Power BI demos will have a lot of colorful charts. I find that a lot of accountants and kind of core finance users like to kind of see more table views of stuff too. So I wanted to make sure that was covered here. And you can see this one's broken out completely by the actual natural GL accounts. and this one, for example, is aggregate rolled up into kind of more the category and subcategory that these natural accounts will roll up into. So it has that full granularity as well as roll up capability. And then on this side, I have a little KPI card, or kind of totals, if you will, where I just briefly kind of show the general kind of profitability. So we have our revenues, COGS, expenses, GP, and then the percentages on those. Then there's a little pie chart here. This is a little date filter timeline where you can, pick certain periods to report off of. This is a call out card, just giving me the total number of sales, a little bit of a line chart between their gross and net profit. And then this one I found a little interesting. It's more of a geographic kind of representation of the data I'm looking at. So right now I'm looking at everything, but the entire page is context sensitive. So if I were to pick, Cascadia, for example, you can see that it's showing me exactly which states I've set up that should fall into that Cascadia region. And then also it filtered all the other visualizations on the chart, on this report for Cascadia. So I can see the gross profit for Cascadia and whatnot. But really where dimensions begin to give valuable insights, we'll be using them in conjunction with one another. So if I were to look at the retail channel, let's say, overall profitability is 33%. If I zoom into Alaska, like if I drill down or filter to Alaska, you can see that my gross profit for Alaska is a lot higher than the average. And maybe that makes sense in terms of the geography of Alaska. Maybe that's, people are more used to walking into a store to purchase things, perhaps. But that same call out in, Cascadia, maybe makes less sense, right? Maybe it's less profitable. But if I were to take a look at the e-commerce channel for Cascadia, I can see it's a lot more profitable. And maybe that makes sense because this region, home of Microsoft and Amazon and whatnot, maybe people are more accustomed to buying things online. So perhaps this will be a cue to maybe pare down our retail operations in this region and really beef up or kind of prop up and support our marketing initiatives for our e-commerce offering in that area. But again, with dimensions, it doesn't have to just be in a filter kind of basis. You can also throw in visuals that combine the dimensions. So this is called a matrix report. So now I can really kind of zoom in and pit my dimensions against each other. So I could pick my industry code along, let's say, rows, and then I could pick, my let's say my channel across columns, and then the intersection of these dimensions, I want to pull in, let's say the total expenses actually. Let's say total expenses, and that will show me kind of in this particular case, I have a whole bunch of non-classifiable expenses, but you can see where the intersection of dimensions can really provide a lot of interesting insights into where we're spending things and kind of how things are rolling out. So hopefully that was a good overview to kind of demonstrate how dimensions can work with your data and how you can derive insights and all sorts of interesting information from the dimensionalization of data.